Hello everyone and welcome back to Explain the Charts. Today is November 26th, 2025, and we're taking a close look at the USDCHF pair, the US dollar versus the Swiss franc. There's been a lot of interesting price action recently, so we'll cover the latest news and then dive into the charts to see what they're telling us. First, let's talk about the current market sentiment. Recent headlines highlight an impressive 8-day rally that has fueled a V-shaped recovery, pushing the pair to a nearly 3-week high. Currently, USDCHF is clinging to gains just below the psychologically important 0.8100 level. However, yesterday's session saw the pair showing little direction, as both the US dollar and the Swiss franc exhibited some weakness, creating a bit of a stalemate. This is interesting because while the short-term performance has been bullish, with over a 1% gain in the last 5 days, the longer-term picture remains decidedly bearish. Year-to-date, the pair is still down nearly 11%. From a fundamental perspective, Swiss National Bank President Martin Schlegel recently stated that he expects consumer price growth in Switzerland to accelerate slightly. This could be interpreted as a hawkish stance, potentially strengthening the franc and putting downward pressure on this pair in the future. So, we have a classic conflict, a strong short-term bullish rally running into a major resistance zone, all against the backdrop of a long-term downtrend. Now, let's bring up the daily chart for USDCHF to get the big picture. As you can see, the downtrend for most of 2025 is very clear, which aligns with the negative year-to-date performance we just discussed. We saw price make a significant multi-month low back in early April, bottoming out just above the 0.8000 level before staging a recovery. After a period of consolidation, the price broke down again, setting a new low for the year in late June around 0.7870. Since then, we've seen a gradual and choppy recovery, but the action in November has been particularly aggressive. Let's zoom in on the last couple of months to analyze this recent rally. Here on this focused view of the daily chart, you can clearly see the V-shaped recovery that began in mid-November. Starting from the low of 0.7932 on November 13th, the market has posted a series of strong bullish candles. This powerful move took us directly to the 0.8100 area, which is a key level of resistance we must watch. This area represents a significant price zone from earlier in the year and is a natural place for the rally to pause. Yesterday's candle on November 25th was a small-bodied candle, indicating indecision and a loss of bullish momentum as it hit this resistance. The key question now is whether this is simply a consolidation before a breakout higher, or if the rally is exhausted and sellers are about to step back in. The long-term bearish trend would suggest the latter, but the recent momentum cannot be ignored. Let's switch to the 1-hour chart to get a more granular view of this battle at resistance. Looking at the price action from the last few days, we can see the strong upward channel that defined the rally. However, over the last 24 to 36 hours, that upward momentum has clearly stalled. The price action has become much more sideways and choppy, which confirms the reports of the market lacking clear direction yesterday. We are essentially consolidating in a range between roughly 0.8055 on the downside and the highs near 0.8100. This consolidation is the market taking a breath and deciding on its next move. A break below this range could signal a deeper pullback, while a push above 0.8100 would be a strong sign of bullish continuation. Now let's drill down even further to the 15-minute chart to examine yesterday's price action. Here we can see the intraday movements in detail. During the Asian session, we saw price dip towards the 0.8080 level before finding buyers, which supports the news commentary about dip buying occurring. Throughout the London and New York sessions, the price remained largely range-bound, oscillating without a clear trend. Each attempt to push higher was met with selling pressure, and each dip was bought back up, painting a picture of equilibrium and indecision. This very short-term chart shows that neither bulls nor bears are in firm control right now. The market is waiting for a catalyst to break this deadlock. So, let's go back to the daily chart to recap and discuss potential scenarios. The key price levels are very clear. The immediate and most critical resistance is at 0.8100. Support can be found at the bottom of the recent consolidation range, around 0.8055, with a more significant psychological support at the 0.8000 level. Let's talk about the potential paths from here. The bearish scenario, which I would place at a 60% probability due to the overarching downtrend, is that this rally fails at the 0.8100 resistance. We would look for a decisive break below the 0.8040 support level to confirm that sellers have retaken control, potentially targeting 0.8000 or lower. This scenario would be reinforced by any further hawkish commentary from the Swiss National Bank or weak U.S. economic data. The bullish scenario, with a 40% probability, involves a sustained breakout above 0.8100. For confirmation, bulls will want to see a daily close above 0.8115. If that happens, the next upside targets mentioned in market analysis are 0.8130 and potentially higher, signaling a more significant short-term trend reversal. Stronger U.S. data would be a key catalyst for this bullish case. The main thing to watch for in the immediate future is the price action around this 0.8100 resistance level. A strong rejection or a decisive breakout will likely set the tone for the coming days. And that's our in-depth look at USDCHF. As always, this analysis is for educational purposes only and is not financial advice. You should always conduct your own research and make investment decisions based on your own individual circumstances. Thanks for watching Explain the Charts, and we'll see you in the next video.